Origo News.
Analyzing AppLovin app value following SEC investigation and technical support drop. AppLovin app has once again attracted significant attention from traders following a period of substantial losses, causing its stock price to drop below key technical support levels. As the software sector's valuations corrected and regulatory scrutiny from the SEC on data protection intensified, a new momentum began to emerge. Below is an in-depth analysis of AppLovin's current valuation and the factors influencing its stock price movement. Recent stock performance and technical analysis. As of the most recent trading session, AppLovin's share price stands at $632, a significant retreat after a surge, signaling a potential loss of momentum. The company has experienced a 7-day return decline of 8.76 and a 30-day return decline of 8.53. Despite these short-term dips, AppLovin has demonstrated impressive long-term performance with a 1-year total shareholder return of 91. Over 3 years, the company's cumulative return has surged by 79, showcasing consistent growth. However, the company's bright future is currently overshadowed by a series of challenges, including a market correction, profit-taking by investors, regulatory scrutiny regarding sensitive data, and a once overvalued stock price that is now losing its shine. Despite its stock currently trading below recent highs, AppLovin continues to maintain a premium valuation, with growth expectations still relatively strong. The key question now is whether the recent weakness in the stock presents an undervalued entry point for potential buyers, or if the market has already priced in future growth, leaving little upside potential. Analysts believe the company's explosive growth potential is not yet fully reflected in its current market valuation, signaling a possible opportunity for investors. The market's accepted value for AppLovin is often pegged around $737, a figure that reflects the company's aggressive growth strategy and its ability to maintain profitability through its machine learning platform Axon. Axon and its role in driving future growth. Axon, AppLovin's evolving machine learning engine, is enhancing the precision of advertising by amplifying campaign yields and streamlining processes. This innovative technology is helping marketers achieve better results while increasing the company's operating efficiency. As a result, AppLovin is expected to continue expanding its revenue base and profit margins, which will contribute to higher shareholder returns over time. Our analysis suggests that the stock is currently trading at a discount to its intrinsic value, with a target price of $737.21. However, despite these positive growth expectations, several uncertainties loom over the company. One significant risk comes from the evolving global data privacy regulations. Stricter data protection rules could limit AppLovin's ability to collect and utilize user data, which would directly impact its advertising revenues. Additionally, the company's growth trajectory is facing increasing competition from major advertising giants, which could erode its profits and hinder its expansion. Alternative perspective: high valuation and market risks. While some analysts view AppLovin as undervalued based on its growth potential, others argue that the company's high valuation poses significant risks. Currently, AppLovin is trading at a price-to-earnings ratio of 73, significantly higher than the average ratio of 32.3 for the American software sector and 41x for its peers. This elevated ratio suggests that the market's enthusiasm for AppLovin may be fueled by overinflated expectations, and a fragile bubble could burst if investor sentiment shifts or the company's growth slows. A more typical ratio for companies in this sector is around 54.7, indicating that AppLovin's stock may be trading at an elevated multiple. The high valuation combined with the company's reliance on future growth prospects makes it susceptible to sharp declines if market sentiment turns negative or if the company's performance doesn't meet investor expectations. AppLovin's future prospects are increasingly vulnerable to shifts in the broader tech landscape. Its premium price tag now casts a longer shadow, especially as the market's enthusiasm for tech stocks begins to wane. Conclusion: AppLovin's market valuation is currently in a precarious position, balancing between the promise of significant future growth and the risks associated with its high valuation. While its innovative AI and advertising strategies hold substantial potential, the company faces challenges from rising regulatory pressures and intensified competition. The stock is currently trading below recent highs, presenting a potential entry point for some investors, but the hype ratio and evolving regulatory environment suggest that caution is warranted. Investors should carefully consider the risks and rewards before entering the market. As data protection regulations evolve and competition intensifies, AppLovin's ability to navigate these challenges will determine whether its stock price continues to climb or faces. With its premium valuation, AppLovin may be exposed to significant downside risk if market sentiment shifts or if its growth fails to meet expectations. Investors should proceed with caution, keeping in mind the balance of risks and opportunities in this rapidly changing landscape.
Origo News.